So the short of it is there's $300 trillion of money in these fiat investments. They're all going to be cut in half over the next 3 to 5 years. They're all, in essence, everyone's going to lose half their wealth if they don't find a solution to the problem. So why am I interested in Bitcoin and the crypto industry in general? It's because there's a mad scramble to find a store of value. We know that cash won't work, and we know that bonds, real estate, and stock are fiat instruments, and they're all going to be debased at the rate of expansion of the money supply. And so what are you going to do? You search through gold, you consider silver, you consider commodities, you consider buying a portfolio of rare art, and eventually you settle upon the idea of perfectly engineered digital gold, something that is superior to gold in all respects, none of the liabilities of gold, all of the good attributes of gold, and that's 21 million gold coins called Bitcoin sitting in cyberspace, right? And so once you found that, you think, well, this is the ultimate safe haven asset and store of value for every investor on Earth. And by the way, it's the solution to 7.8 billion people's problem on Earth, because everybody on the planet has a currency that's collapsing. The only difference is in America and Europe, it's collapsing at 10 to 15% a year, and everywhere else it's collapsing faster. So how can you not get enthusiastic about that?
So in a nutshell, there are $300 trillion in these fiat investments. They are all going to be cut in half over the next 3 to 5 years, and everyone will lose half of their fortune if they don't discover a solution to the problem. The reason I'm interested in Bitcoin and the crypto business in general is that there's a mad dash to discover a store of value. Hey guys, welcome to our channel. In today's video, we're going to talk about Michael Saylor's new prediction that has and will leave everyone speechless. If you want to find out more about it, then stay with us until the end of the video. Also, before we start the video, don't forget to hit like, subscribe to our channel, and ring the bell icon for more amazing videos. And let's get started. We know that cash will not work, and we know that bonds, real estate, and stocks are all fiat instruments that will all depreciate at the pace of money supply expansion. So what are you going to do? You look through gold, examine silver, commodities, buying a portfolio of rare art, and eventually settle on the concept of flawlessly crafted digital gold, a currency that is superior to gold in every way, with none of gold's liabilities and all of gold's positive traits. And that is 21 million gold coins known as Bitcoin. So you've discovered the greatest safe haven asset and store of value for every investor on the planet by sitting in cyberspace. By the way, it is the solution to the problem of 7.8 billion people on our world, because everyone on the planet has a currency. The only difference is that America and Europe are falling at 10 to 15% every year. It's collapsing quicker everywhere else. So how could you not be excited about that during a chat with CZ, hosted by Finance Regional Manager Josh Goodbody?
I think that the major macroeconomic event is the expansion of the M2 money supply. We had a money supply expanding by about 5.5% a year for a decade. And starting this year, it leaped forward by about 24%. And looking forward, it looks like it's going to expand by 15% every year for the next 5 years. So another way to say that is the cost of capital just tripled. And if you're not beating the expansion of the money supply with your returns and investment, you can't preserve wealth. You can't store value. So when the cost of capital tripled, what that meant was a bond that's not yielding more than 15% is losing value. And it meant that a stock that's not growing its EPS faster than 15% annually is losing value. And it meant that real estate that can't grow its rents by faster than 15% is losing value. So the short of it is there's $300 trillion of money in these fiat investments. They're all going to be cut in half over the next 3 to 5 years. They're all, in essence, everyone's going to lose half their wealth if they don't find a solution to the problem. So why am I interested in Bitcoin and the crypto industry in general? It's because there's a mad scramble to find a store of value. We know that cash won't work, and we know that bonds, real estate, and stock are fiat instruments, and they're all going to be debased at the rate of expansion of the money supply. And so what are you going to do? You search through gold, you consider silver, you consider commodities, you consider buying a portfolio of rare art, and eventually you settle upon the idea of perfectly engineered digital gold, something that is superior to gold in all respects, none of the liabilities of gold, all of the good attributes of gold, and that's 21 million gold coins called Bitcoin sitting in cyberspace. Right. And so once you found that, you think, well, this is the ultimate safe haven asset and store of value for every investor on Earth. And by the way, it's the solution to 7.8 billion people's problem on Earth, because everybody on the planet has a currency that's collapsing. The only difference is in America and Europe, it's collapsing at 10 to 15% a year, and everywhere else it's collapsing faster. So how can you not get enthusiastic about that? I think that March of this year was the inflection point. If you had asked me what did I think about Bitcoin and what our treasury invested in Bitcoin in February, I would have said, what is Bitcoin? Or I think I read about it, but I'm not paying attention to it. And if I'd walked into my boardroom and said we should do it, they would have thought I'd gone crazy. By the way, I didn't know about it. I wouldn't have done it. I wouldn't have been allowed to do it. And I wouldn't have had a good reason to do it. And then I think in March, we kind of got hit in the head with a 2x4. It was a wake-up call. And again, the rate of asset inflation tripled or quadrupled or quintupled. And so you couldn't, all of a sudden, the entire industry shifted. Every rational investor in the world today knows inflation is coming. They know there's a problem. So starting in April, people had a problem. It was 3 times as intense as it was in February. All the media started covering it, and all of the other solutions to the problem started to look like they're not working again. So if you think about how fast institutions move, it takes, if you're wicked fast, in 3 months you're working on it, in 6 months you've done something, and otherwise it's quarter by quarter by quarter. And so I think we did it. You saw Square do it, and there's been a parade of 100 institutional positive milestones that happened since March, and each one of those is building a tapestry of momentum, and it's making it easier for the next company. I think it's a no-brainer that private companies, I see a lot of private companies working on it, but I also hear institutions, pension funds and unions and endowments and things like that are starting to move. And I also think public companies will do it. I think the hardest hurdle is for public companies to do it, because there's interlocking regulatory and governance and accounting and strategic issues and communications issues, which are really tricky to work through. But I think that the hedge funds, the Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, all of those, they can move faster, and they typically want to front run the bigger players. And then you have the lumbering institutions. And of course, the private companies and high net worth individuals and family offices, they've got the same problem, and they can move faster, and they don't have to put out a press release saying what they did and why they did it and justify it. Bitcoin is a very interesting uncorrelated digital asset with high volatility, with high potential returns, and you can put 1% to 2% of your portfolio into it with or without leverage. That was a narrative, and the speculative narrative was predominant before March. But that's not going to appeal to 99% of the investors or the money in the world. They want something different. They want Bitcoin is the ultimate synthetic long-term treasury reserve asset. It's an engineered safe haven asset engineered to be superior to gold in all aspects, a bearer instrument that's a store of value. And if I go from one to the other, then I'm not talking about getting 1% of the money from 1% of the investors. I'm talking about getting 50% of the money from 100% of the investors. Okay, so what does that mean? Well, I mean, it means that the people that we want to appeal to are the people that put their money in gold because they don't trust fiat instruments. So there's $10 trillion there. So they'll be looking at, how does Bitcoin compare to gold? How does Bitcoin's volatility compare to gold? Returns compared to gold? Trading liquidity compared to gold? etc. How many people hold Bitcoin versus people that hold gold? I think the second big, by the way, and that's $10 trillion, right? So that gets you a factor of 20 to 50 there. The second bucket is people with bonds, $17 trillion of negative yielding debt, $100 trillion of 0 to 3% yielding debt. Why are you putting money in bonds, sovereign wealth? It's a safe haven. So people's reaction is the market gets scary, they run to a safe haven. I think it's pretty important in the crypto industry, and with regard to Bitcoin, you position Bitcoin as the ultimate long duration safe haven asset, so they run to it instead of running to sovereign debt. That gets you, again, another factor of 10, 20, 30. And then finally, you've got a pool of big tech investors. You could argue a lot of people are using big tech like Tesla, Apple, Amazon as a store of value. They've lost faith in the currency. They know they can't invest in negative yielding bonds. They're not quite sure about gold. I mean, gold is defective. It's an antiquated store of value. It was the best store of value for 5,000 years until we invented the computer, ZZ, right? Like, yep. It's like the Canon camera was the best way to take photos, and we put photos in shoeboxes in our attic until we invented the iPhone. It was a good idea until it became not a good idea. Libraries were a good idea until Google gave away 1 million books for a nickel for everybody on Earth. And then it became not so good an idea. And so what you've got here is people running to these things, like they're running to big tech, they're running to gold. And I mean, I don't know why anybody would run to bonds, by the way, like sovereign debt yielding negative. I can't figure that one out, but they're all looking for a store of value. Add up those three, it's $150 trillion. You know, Bitcoin is 350. So the only reason people wouldn't buy into the idea of a crypto asset as a treasury reserve is because they don't understand it, or they're afraid, or when they show up to the exchanges, they get confused. So I think that when I show up to exchange, if you show me Bitcoin versus gold versus sovereign debt versus big tech, and Bitcoin volatility versus Apple volatility, by the way, everybody says Bitcoin's too volatile. Apple's been more volatile than Bitcoin for the last 90 days. If they saw Bitcoin versus Tesla volatility, Bitcoin volatility, Tesla's more volatile than Bitcoin. And so when they see this compared to big tech, to debt, and to gold, then you're telling them you can trade the one for the other. When they see Bitcoin compared to Tron, EOS, Chainlink, and 37 currency pairs, you're telling them they can trade Bitcoin versus Tron in CNY or BRL or ARS. But there aren't that many people with money in ARS and Tron that are going to convert it into Bitcoin. So and what you need to do is you need to frame the investment hypothesis for people, because anybody that sees gold, debt, or Tesla on the ticker is going to say, oh, well, this is a way I can buy this or I can buy that. Right. You're going to attract the money into the industry by looking outward to the other and to the alt assets and comparing Bitcoin to that. And then once they get into Bitcoin, you can then trade from Bitcoin into other cryptos if you're pursuing privacy, currency, stable coin, application, smart contract. All the other value propositions of the crypto industry will come through the gateway of Bitcoin. But Bitcoin is 0.1% of the ocean of investable assets. 99.9% are in the asset ocean, and we're talking about 0.1%. So we need to carve a channel between that ocean and that pond, and we need to tell people it's safe to convert your gold to Bitcoin, your low yielding debt to Bitcoin, your big tech to Bitcoin, and this is a compelling idea. I think that's how we grow.
Thanks for watching. Don't forget to like, subscribe, and hit the notification bell. Want to learn more about millionaires? Watch these 2 videos.